Myself Vaibhav. In today's session, we are seeing fresh breakout on the bearish side in the Dow Jones Industrial Average, and the main reason has been the weakness which we observed during the European trading session, coming on back of the news that the possibility of an no deal Brexit is increasing, and we got the statement also pointing to that possibility by UK's Prime Minister Mr. Boris Johnson. But still, the negotiations are ongoing, and by the end of this week, we might have more clarity. If we consider the data docket for the day, there were not many major releases coming in, and I think for European trading session, this was actually minor release considering that this was final reading and there were not much of deviation compared to the prior reading. We got the CPI numbers for the month of November, and in terms of year on year, the inflation stands at minus 0.3%. That means the prices are going down both in terms of year on year as well as month on month, and that is pointing to the weakness in the demand in German economy. Moving on to the North American trading session, we are scheduled to get the Michigan consumer sentiment and other readings also. So in a way, this is the consumer survey, and we have multiple data points coming in. If we consider the consumer sentiments, not much of a change is expected for this month of December compared to the prior month, and we are expecting the reading anywhere to be around 76, just slightly lower compared to the prior month's reading, and that is because of the fresh restrictions being imposed in the United States in light of rising COVID cases being detected in the United States. At the same time, the consumer expectations uh, data point is also going to be released, and here also we are expecting the reading around 71. The inflation expectations are slightly uh, might be lower, and the reading close to 2.6% is expected, and the current conditions also most probably will remain unchanged compared to the prior month. Now moving on to the technical front, here we will cover the technical aspects for the Dow Jones Industrial Average, and then we will see what's happening in the dollar index as well. Let's start with the Dow Jones Industrial Average technical outlook. This is the daily time frame chart, and what a rally it has been, starting closer to the 26,000 mark and going all the way above 30,000. And now, after this extended consolidation in the vicinity of 30,000, again we are seeing the fresh break on the lower side. And I think from short to medium term perspective, this is going to be crucial. And if it sustains, we are likely to see the Dow Jones Industrial Average crashing on the lower side towards the 29,000 mark. We have this Fibonacci retracement coming into play around 29,300, which is the 23.6 percentage level of its complete rally. And looking at this consolidation phase where the resistance has been quite steep on the higher side, and given the uncertainty, I think this might be expected. So we will try to see if there are optimum opportunities for us to get involved. If you consider the charting on the 4 hours, where the regression curve is also pointing to the possible weakness ahead for the Dow Jones Industrial Average, and at the same time, if we consider the pivot point series, then the price action is pretty much caught in between the support and the resistance zone, and we don't really have much to read into these pivot point readings, as we don't really have any major resistance or major support in play. So more or less we will have to be relying on this regression curve and the immediate formation on the price action front, where we have this formation of higher highs and higher lows. So this time around, this immediate flow is going to be of high importance. Unless and until we see the break below this 29,500 mark, I think it will be difficult for us to bet on the further weakness towards 29,000. So this time around, this is the area to watch out for, and I am pretty much expecting the current decline, that is the decline which started today, to last at least for next couple of sessions, and in that time space, if we see the dip below this, then that will add the confirmation to the change of trajectory in the near term for the Dow Jones Industrial Average, and as I said, we can then expect the decline to continue. Even in today's session, it is worthwhile to keep looking for the opportunities to go short, and anything closer to the 30,000 mark can be exploited, but even that's almost 200 or even more points away from the current levels, and we will have to be pretty fortunate to get the entry anywhere closer to the 30,000 mark. And why 30,000 is important? Because the formations where we have this convergence of 50, 100, and 200 SMA coming into play, and now that we have the break below this 200 SMA range, I'm expecting this confluence of three key SMS to act as the major resistance in the shorter term, and as a result of that, if we get the entry anywhere closer to that, we can simply keep the stop loss little above it. I think this immediate swing high, the yesterday's high, should be good enough. So for a risk of around 150 to 200 points, we can target almost 500 points on the lower side, and that gives us the risk reward ratio, which is our requirement of better than 1 is to 2. So technically speaking, also we will have the good entry exit point, optimum entry exit points, and as I have tried to explain to you, some of the fundamental reasons are also supporting the possible corrective move in the index, and both these factors taken together are creating the favorable environment for us to look for short sale trades in the US index. Now, let's see what's happening in the currency segment, where the area of focus is going to be the dollar index. The dollar index has extended its decline, and it has even reached almost close to the 161.8% Fibonacci expansion of its prior decline. The decline has been ongoing for last several months now, and this is extended leg of this decline, where we are finding the dollar index holding closer to this support zone around and above the 90, and for last almost a week the dollar index hasn't really cracked on the lower side, and it has consolidated well, and it is slowly and steadily trying to climb above the immediate swing high. Even in today's session, we saw it rallying higher on the intraday perspective after finding support closer to these immediate support areas. And if this holds in next couple of sessions, we might even see this retracement extending towards the 92 mark, so that possibility remains. In the near term, we have to watch out for the price action playing out around this first support of this month's pivot point series. As long as the first support is intact and the price action is looking promising, we can continue to bet on this possible up move. And for that, we will have to utilize these immediate swing lows and then this first support of this month's pivot point series. If you consider the regression curve, it remains steeply inclined towards the lower side, towards the bearishness, but we have to see at these changing circumstances where we have this price action now shifting in the upper band, and if it remains that way, we will see the flattening of the regression curve in coming days, and both these factors taken together, the pivot point as well as the regression curve, then might be helpful while looking for the buy trades on this lower side, where we will try to look for scalping opportunities while utilizing the immediate swing lows to act as the near term support, and unless and until the near term support stands broken, we can continue to look for buy opportunities in the dollar index. So this trade is not really with the trend, it is contra trend, but it is taking into account the extended decline which we have already witnessed in the dollar index, and then There's long consolidation of more than a week where we have these identical lows being formed, and on multiple occasions we have seen buying emerging as and when the dollar index got closer to the 90.5 mark. So keeping that in mind, I feel it is safe enough to look for scalping opportunities, and then in that case the entry point would be closer to this confidence zone of 50 and 100 SMA, which are passing closer to the 90.8 mark, just above 90.8. And on the higher side, the target is going to be above these immediate swing highs. We have these two prior swing highs in the vicinity of 91.20, and if the dollar index is able to break above this, then that will open up the window for the dollar index to rise to even 92. Of course, eventually that is not likely to happen in a day or two. It might take time, but if the trajectory changes and if the bullishness takes hold, then in due course of time, even that level can be expected. But for the today's session, we are more concerned with this entry point, and here I think if we are going to use the 90.80 to 90.90 price zone to be our entry point while keeping the stop loss anywhere closer to 90.60, we will have to target at least 91.5 on the higher side to compensate the risk we are taking, and the risk reward ratio should be good enough. Suppose if we happen to be wrong, we shouldn't be losing too much money, and if we happen to be right, we should be making decent amount of money. So that's the reason behind keeping the risk reward ratio of at least 1 is to 2. More than that is always welcome, but at least that's what we look for as a minimum condition. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Thank you all for joining in. Goodbye. Mm, mm.